saved this business owner $479,000 on his tax bill. The best part, he got back an additional $86,000 refund from my team amending his 2023 return, which means I put over $565,000 back in his pocket. Hi, I'm Jacqueline Matoza. I'm a retired Fortune 25 CPA that saved extremely wealthy people over trillions of dollars. Now, my mission is to rebuild the middle class of America. I do this by helping self-made millionaires protect their money and exponentially grow their wealth using the same strategies I used to deploy for my billionaire clients. In this video, I'll walk you through the 4-part tax plan I developed to put more than $500,000 back in my client's pocket. Before we begin, everything I talk about is purely for informational purposes and is not to be taken as financial advice or for you to implement on your own. Cool, let's dive in. All right, so let's break this down so you guys can see exactly how I did this. So pre-tax plan, let's talk about when he came to me, what was the current state. So we're gonna label this pre-tax planning. So you know, this is before he came to me. So my client called, very unhappy, sad face. He was like, what in the heck is going on? Okay. How was he set up by his CPA, okay? Non-tax planner CPA. So they had him with a W-2 of $175K to pay his bills. He started a business in 2023. The CPA elected it to be an S-Corp. S-Corp has the arrow pointing up, meaning the money goes onto his Form 1040, his individual tax return, okay? So this was set up in 2023. He owns that. The other thing that he owned was a group of 14 properties in real estate. So I'll draw a little house here so you know this is his real estate business. And he had 14 of these. And so how this works, what happened was he had losses here from depreciation. He had $2 million in net profit in his business. So these losses were flowing up into his 1040, offsetting some of his income. The problem is he had too much income. So this $2 million forced him, as my client, to have a federal tax rate of 33.5%. He's in the upper tax brackets, okay? So he's paying the highest tax bracket. This meant his tax bill was $757,000. What the heck is that? He was so upset. Woo! We're breaking things. He was so upset, okay? So let's break this down. What happened for me to get him from $575,000 to $278,000 in total tax due, okay? This tax bill is enough for like 3 mansions in the state that he lived, and here he is writing a check, lighting his money on fire to the IRS. And he was very upset. So what did my client do? He called me. I'm gonna draw a little phone here. 1, 2, 3, 1, 2, 3, 1, 2, 3. And we're gonna put it here. Kind of looks like a mushroom. Oh well, that's why I'm not an artist, I'm a CPA. So here it is. So he called me, what the heck is going on? Why am I paying so much? Something has to be wrong. And I said, oh yes, this S Corp here is killing you because it's putting you in the highest individual tax bracket. So, post tax planning. Let's dive in. What did I do? I had my client. I showed him what I was going to do because I financial model everything before we do it so you guys can check my work and keep me accountable. He had a big smile on his face when we were done because I showed him what I did with my ultra high net worth individual clients. Let's break this down. His business, we moved into a holding company. Okay? This is a C corporation. Not an S corp, not an LLC, not a partnership. We need this to be its own taxing liability. So it separates you from your different pockets on your pants, which is like the LLC, the S corp, the partnership, the sole proprietor, different pockets. We separated this. He's now a shareholder. I'm going to draw this over here. He's now a shareholder. That money stops. It stops right there at the C corporation. This is the big difference. And this is where CPAs will tell you, oh, there's double taxation. No, there's not. Okay? Let's break this all down. So now the $2 million is here in the C corporation, his net profit. Okay? What does this mean for my client? This means his tax bill is $245K. Why? Because C corporations have a tax rate of 21%. Not 37 at the individual tax bracket. This is law. You can Google it. Look it up. I'm not making it up. I'm not lying to you. So this change alone took the majority of his income from a upper bracket. It's graduated. You know, you pay different rates at different amounts. From 37 to 21, flat tax in corporations. Donald Trump has legislation to reduce that number down below 21%. Then we left everything else underneath him as a person. So here he has his real estate. Remember, we drew this little picture on the other side. He has 14 of these that are throwing off losses. That losses is to reduce his tax bracket on the individual side, right? So we have depreciation losses here. Then he has some other investments that we did to help him keep his individual side down. So we did some oil and gas. Okay, that was in a different LLC. This is how the real lawyers and accountants draw things. Circle means it's a pocket on your pants. It goes up. If you have an arrow up, it goes up. It's a pocket on your pants. It goes into your 1040. Okay, guys? So here, this now, the oil and gas gives you a lot of deductions year one. Think of it as depreciation. Similar to depreciation, but it's called something else. We'll talk about that in another video. So, all of that being said, you get depreciation from oil and gas equivalent. You get depreciation from your losses. This offsets your individual. We reduce your tax rate straight to 21%. You automatically, if you're at the 37% bracket, you're saving 43%. That's a lot of money. So then what did I do in the C corporation to reduce this bill? Because 2 million times 21%, obviously there's some extra sexy stuff we did in there to reduce this down. So first thing I did was build a captive insurance. This captive insurance plan is his own insurance company. So now he owns the insurance. That insurance can go against anything and everything that any other insurance doesn't cover and more, like business disruption. Everybody who got caught with their pants down during COVID, if they had a captive insurance, they lost money, it would have reimbursed them tax-free. So you're putting pre-tax dollars into an insurance company as premiums, and you're getting the money as a refund tax-free, okay? So keep in mind, this is important because this is how you save money. One-sided deductions. The captive insurance will invest that money and keep growing it and use it to offset any liabilities in the company or the owner. He's a solopreneur, so if he gets in a car accident, his wife is gonna have to hire somebody to finish his cases and do his work. So this is really, really important for business risk, business disruption, as well as, you know, personal liability, general liability, health insurance, dental costs, anything of that nature that he wants to refund for medical purposes, he can do out of here that his original insurance won't cover. So co-insurance, all of those bills that you pay when you go to the hospital, this will cover. So this is why this is really important as a stopgap to reduce the risk as a business owner. The second thing we did was we paid an executive bonus plan. We set this up. What is it? Executive bonus, you can take $1 million deduction per executive in your C corporation. That $1 million can go in terms of a cash bonus, buying stock in the company. It can go to life insurance. There's all kinds of different ways we can compensate. For this guy, he's a solopreneur, so we did it with life insurance so that, again, if anything happens, we can use the living benefits from the life insurance. We can do all kinds of stuff similar to what Jim Harbaugh did. He got paid $5 million from Michigan. He took $4 million loan, took $1 million in pay. That $4 million gave him a $65 million premium on the back end. This is what we do. This is the sexy stuff that we do with our clients. Not every life insurance agent can do this. This isn't a Transamerica policy. This is not a WFG thing. This is like legitimate, real compensation for executives. There's very few companies that do it, so don't think you can just go out and do this on your own. And this is my caveat with YouTube University and TikTok School. They cannot teach you what we know. We got paid millions to do this, so don't think you can cut corners. The third one is basically what we did was called a 401k profit sharing plan. What is this? Most people are like, oh, I don't want 401ks. Well, after you hang out with me long enough, you're gonna love a 401k. So we did profit sharing, cash balance. What does this do? Easily 350k deduction. Easily. We can move it up, but easily $350,000 deduction every year. This is a deduction in the C corporation. He is not going to pay tax on that until he goes into retirement and takes it. Or we can do what's called a backdoor Roth conversion and get it into tax-free, and then he never has to take the money out because we convert 401ks that are Roth into 401k IRAs. There's no required minimum distribution. There's no tax on them. You can pass it when you die. It's tax-free. So these three things here, we're able to pull money out of the corporation. The only one that goes taxable on his return is this one. That's it. But like any good C corporation, we are gonna do what's called a gross up clause, where the C corporation pays his tax returns, and then when he files his tax return, he gets that money back in his pocket. So it's a temporary payment. By the time you file your return, it all goes back in your pocket, and all of that said and done, super amazing. So the other super amazing thing that I haven't talked about yet is how this oil and gas fund, ooh, my pen, getting stuck. After 10 years of investing the amount he put in, he's gonna have $26 million, okay? It's gonna grow and compound, reinvested, and compound. Everybody talks about compounding your money, but nobody knows what that means. So we're gonna send another video about this later to talk about it. This reinvested and compounded at 25% is how we get to that $26 million in 10 years with the amount of money he's putting in, which was $400,000, okay? So when he's making $2 million, we're taking $400,000 of that $2 million, putting it in an oil and gas fund, and that's offsetting all of his money, okay? So pretty impressive, don't you think? That's more than your CPA is doing for you right now. So I say all of this because there's a power in bringing that money back from the government and putting it back in your own pocket, where you control it and you can tell it where to go and you can tell it to earn you more money. This is how you get out of being rich, where you have to keep working and you become wealthy. So anybody who owns a business, anybody who's a partner in a business, anybody who's doing any of this, we need to get you investing your money so that you can get here in 10 years and be done and you don't have to work anymore. Go buy some real estate, go do some super cool things, don't care, whatever. So at the end of the day, when we added his C corporate tax plus his individual taxes, we net a total tax this is the total tax of both individual and corporate of $278. That's a tax rate of 20%, okay? Some decimals in there. This 20% is a heck of a lot lower than this 33.5%. That's how we were able to save him this money. So over here, we saved him 479, oh my gosh, this pen keeps doing this. We saved him $479,000, okay? Oh my God, we're gonna have to pin this. 479K. This is 13.5% tax savings, okay? That's a large tax savings. You can see we charged him $50,000 engagement fee. We saved him $479,000 or 13.5% in taxes. What does this mean? The other thing we did, the bonus we gave him, is when we amended his 2023 return, he bought an office building. What did his CPA not do? A cost seg study. We did the cost seg and got him a refund from cost segregation. Cost segregation, in case you didn't know, is the fourth depreciation that really works well with commercial real estate. You can do it on single family, but the fees to get it done can be pretty expensive. So we got him $86,000 for the purchase price, running through accelerating the depreciation on this. So when we put these two numbers together here, oh my gosh, I need to take this thing out. My hands are a mess. When we add these two numbers together, we made him $565,000. We made him, in our tax planning, we charged him 50 grand. So he made $515K net after all of his expenses, everything from what we charged him in engagement fees to what he made, he netted 515%. That is a 1,030% return on investment for the engagement fee. When has your CPA or your investment team, your wealth manager, your CFP, I don't care, whoever your advisors are, ever made you 1,000% return in your life? Never. This is why I tell people, if you have the right tax planner, not tax strategist, because tax strategist doesn't exist in corporate America and those people would never get hired. So you really need to look at people's resumes. Like I started at Ernst & Young, it's a top 2 firm. We do this. That's why they pay us so well, because they don't want us to leave and start our own businesses where we make more, okay? We work with the elite, the big Fortune 25 companies, the companies that IPO like Facebook, Apple, Google, all of those big name brands. We save them more than this because they make more money, right? Amazon pays 1.4% in taxes. So this is where we earn our keep, and we really earn our money, and it's all about reinvesting that money, taking it back from the government, putting it in tax-deductible investments so that you can get this money back, right? He did an office building in 2023. He got money back because the CPA didn't do their job. He put money in oil and gas. He got large deductions. And the upper, he put $400,000 in, and he got about $380,000 in tax deductions. Okay, this is all legal. This is what they do. It's not what you hear on social media because they're not real. These guys are just literally telling you to go do Airbnbs and Augusta rules, which gives you tens of thousands. But here we're doing millions, $350,000 deductions, $378,000 deductions. Like, these are big deductions, and this is how my team moves. So if you want help, click the button, call me. We'll turn your frown upside down. Have a good day.